you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. What we're going to do today is take a look at that E-mini S&P. You can see the 382 on the daily up there at 39.29. The high was 39.28, and of course we were looking for a place to go short. It gave us several opportunities that we'll go into in just a moment. But first of all, I want to address something that I probably get asked this more than anything else, and that is, how do I handle all of the fundamental news, whether it's sociological, political, fundamental, whatever it is? Folks, I don't handle it. I don't pay any attention to it. I can say to you with 100% certainty that every time that I have tried to put in fundamental information into a trade, and I haven't done it for 40 years, and I've proven to myself over the last 40 years that I know that stuff doesn't work. The reason why, the market follows, the prices follow the trend. And as soon as it's over, and that's it. You don't know what's going to happen next. But every single time that I've had a major thing happen, it's because I went exactly the opposite of what was people were trying to tell me. I know one of the big examples was the Treasury bonds when they were at 172 2.5 years ago, and they were telling us, zero interest rates. These were Phi Beta Kappa, guys that win the peace prizes and stuff were telling us that. I mean, that you didn't have to be a third grader to figure that one out. Okay, I mean, they're just over and over again. But my biggest one was in 1976. Is in July of 76, and I was long soybeans more than I wanted to be, and yet the report was so bullish they were going to be up the limit at least 3 days in a row, and the reports kept coming in, limit up, and then I said, this is not right. So I just put my stops at break even on the day. So if they opened even just a little bit, I would be out of it. And by gosh, it was the right thing to do, because they opened about 3 cents higher. I got filled right near the high of the day, and they went limit down for 3 days in a row and kept going down for a considerable amount of time. And I've seen it over and over again. We've seen it here before. Brexit, folks. When we were selling Brexit at 144, everybody said, oh, this is a slam dunk. It's 9-1 odds. It's going to be against the, people getting out of the EU. And by golly, look what happened. It goes from 148 all the way down, I believe, to 129. Didn't take the whole thing down, but we took a bunch of it. Just over and over again. I can tell you that I can never remember, because there is no time that I can think of where all of it fit together and all the news was going to go up and stuff like that. It just doesn't work that way, at least not for me. When I went to trade on the floor of the exchange in January of 1982, the first thing Barry Lynn said to me, I traded through Lynn Waldock because I bought the seat from Jack Waldock. He had 7 seats, and the only thing he asked me to do would be to sell the seat back to him when I was ready to sell it. And that I did. And anyway, at market price, he was he said, you took the risk during that, so you get that percentage gain, which it was a good gain, but nothing like what it could have been. Anyway, Barry Lynn said to me, he says, you did a lot of business with us when you were at Drexel those 6 years in the meats and currencies and stuff. And he said, what can I do to make your stay here in Chicago more profitable? And I said, Barry, if I have a loss at the beginning of the third day, I would like the computer to take me out, either give the order to the runner and just get me out. I don't want to make the decision, but if it's at the beginning of the third day, can that be programmed in? He said, that is no problem. He said, we have, people that do that. And so I did. And over the next, 3 years that I was there, it probably happened to me probably close to a half a dozen times, about twice a year, maybe a little bit more, but not much more. But every time that if I would have just reversed those positions, it would have made a lot of money. And that's my little little gremlin on my back. I carry that because I don't reverse very well, and I'm okay with that too because I'm right more than I'm wrong, and I make more than I lose most of the time, and that's all I'm trying to do here when I'm doing this. But the news that you hear in all of this stuff, and that's why it's hard this time of the year when we're getting ready for an election. I mean, my goodness, you can always tell when a politician is lying because his lips are moving. It doesn't make any difference. Red, blue, black, white, green, doesn't make any difference. They're all the same. They want to get elected. They want that power, and you just shake it off. Hopefully we'll get through it. But anyway, those are the kind of things. Now, what I do is I watch how the market reacts to the news. Like today with the Federal Reserve in there, I want to see how the news reacts. Now, we sold that thing pretty good. It's got had 100 handles in it just a little while ago. We've only been in it since Sunday, Monday, Tuesday. This is Wednesday. We've been in it 3 days. And now we got the Fed in there. What are they going to do today? They're going to drop rates. Are they going to raise rates? Everybody's expecting 0.75. Well, the big surprise is they do less or they do more. Then there would be some type of surprise. But the fact that market made the 382 in the S&P and also did it in the NASDAQ, but the NASDAQ did it the week before and couldn't make new highs. Well, the Dow Jones and the E-mini S&P were screaming ahead last Thursday and Friday. Not the NASDAQ. It couldn't even take out last Thursday's high, showing you that it had some weakness. So that's what I try to do. When I was doing my graduate work in Indiana, my proctor had a parrot. I think I mentioned this before. The name of the parrot was Oscar. And he got free Wall Street journals because he was in the business department, right? But he told me, he said the only value he could find in the Wall Street Journal was to line the cage for Oscar, and I was in charge of that, of course. But anyway, I did anything to get around him to get what knowledge I could. But that's you got to realize, folks, that when these prices are where they are, look at wheat. Just 2 months ago, folks, we were out of wheat. Never was there ever going to be any more bread slices ever sliced. And wheat going near $13 a bushel. Now it's at $7.50 or $8 a bushel, and nobody wants it. So there's another perfect example. I mean, there are one example after another, after another, after another. And if you want to see how highs are made, go look at those patterns that we look at. Look at the 3 drive to a top pattern. Look at the 1-3-5 pattern. Look at the butterflies. Look at the Gartleys. I mean, they're big ABCDs. When the ABCDs are there, that's what your edge is. That's the sum total of all the buyers and sellers. Now, I'm going to get off my soapbox, and we're going to talk about a couple other charts here that I think are important. My guest today, Kevin Murphy, a student of John Ehrman, who had been on my guest several times over the years. I think John passed away, wow, it must be 6-7 years ago now, maybe 5. I'll ask Kevin. He will know. But he was a really smart guy, had some great stuff, and some of it's available, some of it isn't because it died with him, but he did have some good things related to geometry that fit in pretty much with what we're looking at in some of these markets. So we'll be right back. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm back, and I posted a chart of the E-mini S&P showing the 382 retracement that came in yesterday while we were on the air, folks, at 38.80. I said, keep an eye on that. The high overnight was 38.81, and now we've dropped 50 handles from that level. We got all the way down to 83, excuse me, 80, let's try that again, 88.35. So it dropped quite a bit, about 55 handles. Now we've got the Fed in there today, so there's probably going to have some rallies along the way, maybe collapses, I don't know, but that's what it's doing. My little tirade that I was on a little while ago about the news and the fact that I don't do it, folks, it's really true. I've got 4 major degrees. I've got a degree in nursing and as a scrub nurse. I've got a master's degree in business. I got a BS degree in chemistry and then also in pharmacy. So I've done a lot of stuff with these things, but never have I seen anything so simple as using these patterns. I'm really biased. I'm not an Elliott wave person because I don't understand the 2s, the 3s, the 4s, and the 5s. I'm like Curly. I know one thing, AB equals CD. And it wasn't until about 4 years ago when I was really working closely with John Jameson, and he showed me the work of Benoit Mandelbrot, and that Mandelbrot used ABCD known as a lightning bolt. I immediately saw that because I'd seen it on page 249 of Gartley's book, written in 1937, known as the ABCD pattern. There have been 4 different methods of trading using ABCD done over the years. The first one was done, oh dear, if I can just remember that dude's name, I can't, what was his name? The second one was done by Larry Williams and Charles Lindsay. They did the Trident stuff. And then there was one other one sometime in the 55-60 area that someone did it too. They took it right out of the Gartley book is exactly what it was. And it works. I mean, it doesn't work all the time, but it works. It gives you a pretty good idea. All I've done is I've added some ratios to the Fibonacci sequence and numbers of sacred geometry with the help of Bryce Gilmore and a bunch of other folks along the way. They give me an idea that, yeah, these things fit together. But as far as counting these waves and listening to what the news is, that's cannon fodder, folks. I mean, that really is. I mean, the one thing you got to realize here, that they can lie to you, they can cheat you, they can give you misinformation, they can do everything they want. But the one thing they can't do to you is they can't lie to you. Because if prices are going up, there's more buyers. And if prices are going down, there's more sellers. How many times have we seen this? Look what happened just recently in the stock market. I mean, the world was coming to an end. We had nuclear things going off in Ukraine, and the market wouldn't even go down in early October. You know, it bottomed on what, the 14th? It would make slightly lower. No, there was no selling in that market. It was telling you, my fault on that was I didn't buy it, and I saw that it was going to go up. I covered shorts for everyone, but I said, nope, I just can't buy it. And that was a mistake, because that was one of the perfect examples of, by guys, the news don't mean diddly squat. Trade what you see, not what you think. I know I say that all the time, but sometimes I don't even believe it myself. Okay, let's take a look at a couple others that we want to pay close attention to today. I posted the one of the E-mini S&P. We've hit one standard deviation to the downside at 38.25. The ABCD on this pattern that we looked at this morning comes in at 38.05, and I would be this is what I'm going to be doing, but it probably might be the wrong thing, but I'm going to say I'll be buying at 38.07, covering those shorts, and then I'd be looking for a pullback. And since we dropped 100 handles, we could easily jump 40 points. So I'd be looking at 38.50 or so, 38.49 to put it back out after the Federal Reserve is in there. Now we've got situation going in Treasury bonds. If you'll recall, we talked about this yesterday. They're still acting incredibly weak. This is a daily chart showing the last 382 retracements that we had, and that's all we had. One was a 5-day rally, the other was a 7-day rally, but it could only take out the previous week's high by 2 pips and then dropped, $2,200. So here again, that's also not doing very much. So it looks like the status quo as far as what's happening to these things. So my assumption is it's going to keep doing that until it stops. But as far as the news, I'll listen to what it says after it's all over, because there's a key word in there that is very important from what John Jameson told me, who follows the yield curve. And if Mr. Powell says we are going to manage the yield curve, then all bets are off, because they have some things that they are able to do. They will not be doing bond buying. They will be doing yield curve massaging, or what was it called? Yield curve manipulation, or managing the yield curve is what he called it. So that's what you want to hear. If you hear yield curve, you'll see the markets jump to the upside. If you don't hear that, maybe they'll just keep going to the downside. But that's what we're watching here in the Treasury bond market. The gold market, we didn't quite get up to our sell price yet, and that was at 1668. We got to 1662. We still have that 1668 working in the market, and that's it. Now, I wanted to, since we were talking about this, we talked about the grain report and all the stuff that was happening, how bullish it was and everything. Just a perfect example for what I just talked about. And I'm not angry. I'm angry at myself for not seeing this, but I was doing so many other things. I didn't pay attention to the grains when they had this news. But look at this. This is the price of wheat, folks. It's up 75 cents, and it stops right at the 61% retracement. And over a 2-day period, it makes a perfect A, B, C, D butterfly up there at the exact price, 904. It's dropped $3,000 to yesterday and today, folks. And that's with really, really bullish news. God help it if it had bad news. Holy moly guacamole. Now let's take a look at the other one, which is the corn market. Very similar type pattern, only not quite as strong. And it's the same thing, really good news, really bad action. So that's the key. The fact that this came all the way down, went up and made an ABCD at a double top almost, and then boom, down it came, and it's come all the way down back to before what the report was doing. So the report really, what's going on in Ukraine doesn't really affect the markets. It affected the people that wanted to be buyers and sellers, but it didn't affect anything about wheat or anything like that. So another important thing, to pay close attention to. And I had one other one here that I thought that we should pay relatively close attention to, and that is Facebook, folks. I'm not a fan of Facebook because I don't belong to it, don't know anything about the man other than he's a pretty arrogant little guy, but he's really smart, I guess. Mr. Zuckerberg. Anyway, you can see this stock has come on bad times. But look at this big gap down, folks. You see right here, there's your 382 retracement, folks. After this huge earnings surprise, this is when the game changed. That was a game changer. And then they tried to rebuild the thing, and now we're way down into this area here, getting ready to break below $90 after being up to $350 when we were making a 3 drive to a top pattern. Drive 1, drive 2, drive 3, right at the high. Now, you didn't have to know any fundamentals about that. You say, well, if this is a 3 drive, maybe it works, maybe it doesn't, but let's give it a shot. You see what happened. 877-927-6648. Stay tuned for Kevin Murphy. He's going to be our guest. We come up here at the break, which I think will be coming here in just about 10 seconds.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Kevin Murphy on the line today. Kevin, are you there?
Yes, I'm here. Hey, Larry.
Hey, it's good talking to you. Tell me again, when did John Ehrman pass away? Was it 5-6 years ago?
About 5 years ago, May, I think, of 2016. So I guess it's 6 years ago. Yeah.
Yeah, that's how I remember it. And of course, you were his neighbor down there, and someone that met with him quite often. Is that correct?
Yeah, we talked together about every day for like 14 or 15 years, and then I ended up moving up here to Nashville where he lived and spent some time with him, and then he passed away about 6 years ago.
Yeah, the last few years were really tough on him. His wife passed away, and then he died and got sick and stuff. But tell us, are you going to start carrying the torch for Ehrmanometry again, or what's your plan?
Well, I think so. I'm certainly using Bill's work. I'm using it in a little bit of a different way than he is. I'm kind of developed a market model from it. So
Okay.
the answer is generally yes. I'm not sure what kind of platform I'm going to use for investing yet or working with clients. I haven't gotten there yet, but I am working on that.
Okay, Lester, we got chart 1 up. You want to tell us, the folks, what you're looking at here?
Yeah, so Bill basically developed a market trading day count, basically tracking every market trading day from when he started back in the year 1907 to the present, and he used geometric patterns to identify market highs and lows. So there's 4 charts to this presentation. The first 2 are not that important, but they're going to be quick. But this chart basically shows basic geometry of like an isosceles triangle, where market highs and lows are simply connected by the square root of 2. So back in January of this year, it says that there was a specific market relationship between the 1982 low, the 2009 low, and the March 2003 low and the high in January 5th. And when I saw that relationship there, it was very powerful. And it's worth saying that simple ratios are the most powerful in his work. So it essentially said that the high seen on January 5th was a very significant high in the long run. So it turned out to be the high in the Dow for the year.
Yeah, it sure has so far. We've had quite a bit of a retracement. Yep.
So it also shows that, historically we've seen the same thing between 62 and 82 is tied into the 1976 high in the Dow Industrials. That's something he figured out himself. So the basic square root of 2 is pretty fundamental to the markets and part of his geometric template. So that's all the time I want to spend on that. I'm just showing people why it peaked back in January. Okay.
Now we've got chart 2 up as now, and I think it's an expansion of what you just looked at. Is that correct?
Not really. It's an explanation of a concept that Bill invented called the balance point.
Okay.
And the balance point is key into the presentation that I'm going to be talking about today. Okay. And it's essentially the midpoint between 2 major highs or 2 major lows. So what Bill found out was back looking at the market movements in the 60s, like 62 to 74 and 62 to 82, that there was a basic, quote, Fibonacci relationship, a 1.618 relationship between those lows. That math of those numbers are shown on the chart. And basically what he figured out later is that if he took the Dow high back in the year 2000 at the peak of the internet bubble, that the projection from that high back to a point was also part of that mathematical relationship. And it was actually the midpoint between the 1966 Dow high and the 1968 S&P high. And those trading days those market highs were 706 trading days apart. So the midpoint was 353 days after the 66 Dow high and 353 days before the 68 S&P high, which basically told them that the balance point or the midpoint between those highs was significant because it tied into those other lows made in 62, 74, and 82, and it helped forecast the high back in 2000 in the Dow Industrials.
Well, I know
the purpose of this chart is to just show how the concept of the balance point was created. So go ahead.
Well, I got 2 questions already coming through. It's the same question. What are the dates coming up? They want to know what's going to happen next.
Yeah, well, that's what this is getting to, okay?
Okay, good. That sounds great.
Those are historical reasons. So the balance point concept is key. So if we're going to move to chart 3.
Okay, just take me a second.
Let me tell you what I did. So basically what I did is I expanded on his work and I started playing around with the idea that all the market highs and lows are balanced, all the ones throughout history, going way back to the work that he'd done back in the 1920s and 30s all the way to the present. And I was fiddling around with it or playing around with it, and I realized that when I took the market lows back in 32 and 42, that's 1932 and 42, and compared those distances to the high in 2000 or the balance point highs in 2000 and 2009, there was a specific relationship based on the square root of 2. So if you take that original distance shown on this chart, 15825, and you multiply it by 1.14142, you got the balance point to the lows in 2009. Now, to me, that could not have been an accident. Okay?
Yeah.
So what it said is that the balance point low in the early 30s and 40s was directly connected to the high in the 2000s and the low in 2009. Wow. And I'll get more into that in the next chart, but that really piqued the interest that what was going on long term wasn't random, okay?
Yeah.
So then we had the COVID low back in 2020, and you see on the chart, it's kind of small and it's kind of detailed.
Yes.
But the March low in 2020, I took a look at, and then I took a look at the other low made in the previous, or in the December low of 2018, a couple of years before, and I balanced those lows, and then I compared the distance to the 1930s and 1940s low, and lo and behold, there was also a precise mathematical relationship to that, and that was a number known as 1.1472, which is an unusual number, but it's derived from a Fibonacci number. It's also the cubed root of the number 3. So if you type the number 3 into your calculator and hit the square root key like 3 times, the number would be 1.1472. So it essentially said, when I looked at it, that low should be paid attention to in 2020 at the COVID low. And at this point, I was just starting to piece this stuff together, and it implied that low would hold for quite a while. So what I did, well, the markets ran up to the high back into January of this year and have since corrected into this October 13th low, okay, which we saw a couple of weeks ago. And I have a couple of points in the year 2024, which I identified as potential major lows. So what I did was I compared that low with a low on the 13th of October, and it says those two lows are definitely connected to the lows, to other lows stemming back into the 1800s. So at this point, let's go ahead and jump to chart number 4.
Okay. This is very interesting to me because it's geometry stuff that I really enjoy. So let's get this up here. Okay, here we go.
So this is obviously quite a bit more complicated, showing a lot of detail. So what I basically did is I figured out, based on Bill's trading day count, how to identify other major high and low points back into the late 1800s.
Kevin?
You need to go. That's fine. Hold on. I'll hold.
No, we could be right back. We got to pay a few bills. We'll be back in 3 minutes, okay?
Yep.
Kevin Murphy, folks. Hermanometry. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, talking with Kevin Murphy. He's talking to us about John Ehrman's work called Erminometry. Are you going to change the name of it, Kevin, or are you going to leave it?
No, I don't know. I have no intention at this point. I really don't know. I haven't really thought about that comment. I mean, he's the one that invented, pieces of it. So I certainly don't mind holding the name. And I understand people want to know what to expect in the markets from here, and I'm going to go over that as soon as I finish up explaining a little bit more of Chart 4.
Go right ahead.
And some of what I did, and then we'll go into what it says about the future here, okay?
Okay, sounds great.
So Bill identified the points of the 1942 and 32 low. What I did is I identified other major lows, highs and lows going back into the 1800s, like the 1893 silver panic, the 1884 Grant Ward panic. There's other lows like 1856, 1842, and other major highs. So what I did is I figured out using his techniques what the proper day count was for those lows, and then I compared them with other projections for major highs and lows that he and I figured out maybe 10 or 15 years ago working together, okay? So that high, that major high you see in the chart in the upper right-hand corner, that's actually something Bill and I discussed about 15 years ago because it seemed pretty obvious it was going to be a major high. But what I found out was comparing all these major highs and lows and creating balance points for them is that they're all related, okay, which is extremely significant. And we're talking about distances of over 100 years. And what's popping up is that these numbers are also showing very simple, basic mathematical relationships like 1.5, 1.25, 2, 1.618, that kind of thing. And the fact that they're such basic constant ratio tells me they're very significant and important. So it's basically saying that all these major highs and lows for the past 150 years are tied into major highs and lows now and into the future. So let's go ahead and step back into Chart 3 again.
Okay. Just take me a second to get it up here, and we'll be ready to go.
Okay, so what I did is I had an idea what a major low would be in the year 2024, a couple of years from now. And I looked at a couple of those, and I compared those to the low we made on October 13th. This was like the day after, and it said to me that was an extremely significant low because it tied into those major points back in the late 1800s. And what it says is this. It says that was a major low that's going to hold for many months, and it is also going to drive the Dow Industrials to an all-time high next year. Okay, which is going to surprise a lot of people, but it's not shown on this chart, but there's also a balance point between the high in January of this year and a high next year that says the Dow Industrials are going to rally to a new all-time high next year, and we've just started the process of that rally. So the Dow should be relatively stronger than the S&P and NASDAQ and should lead the way higher for several months into a major high next year. And then after that, essentially the markets will collapse into a major low in the year 2024.
Okay.
So I would guess if the Dow's at a new high sometime next year, it would drag the S&P up to about the 4,400, 4,500 level. And then from there, the market should see about a 50% haircut into the year 2024 for that second major low. So essentially what I've done is I've compared the 2 points and said we just hit a significant low and we're going to rally here for months. And it's going to be led by the Dow Industrials, with the NASDAQ probably being the weakest and the S&P somewhere in the middle.
Well, that's what's been happening over the last 4 weeks. That's for sure. The Dow's been a monster. It's been really strong.
It should lead the way and be relatively stronger than anything else. So how, at least in my opinion, how you'll know when it's time to exit is when the Dow Industrials print an all-time high above their January high. And my guess is that will occur within a month of the top. And at that point, we should begin to see a dramatic sell-off into a major low in the year 2024. Which, in my opinion, will end the bear market that we began in January. So
that's going to be really interesting. Now, what I'd like to do is you haven't quite formulated what you want to plan or what you're going to be doing, but if you're going to move forward and show the folks what you're doing and you want to market something, please get back with me, and we'd like to let the folks know how they can reach you. Is there a way they can reach you now if they have any questions about John or what you're doing now?
They can certainly email me, and my email is kwmurphy, KWMURPHY at bellsouth.net.
Okay.
They can email me, and I will, send them information as much as I can. Again, I haven't decided on the platform. I have been developing a track record trading futures since the beginning of the year, and I'm going to have it audited at the end of this year. And I've done very well, and I'm simply going to have it audited. And then at the beginning of the year, I'm going to decide, exactly what I'm going to do going into the future. And as yet, I haven't decided.
Well, when you decide, you let me know, and we'll try to help you out if we can, because I appreciate the work you're doing, and it should be rewarded. So we're going to have you on again, and if something happens that you see something that is quite startling to you or something we should know, call me, and we'll get you on the show as soon as possible.
Okay. Any other questions, or is that it? Is that it for today?
That's what we have for today, but we're going to have you on again soon. So keep in touch, Kevin. I really mean that. I think you got something that you can really use, and keep up the good work that John started. Because I know you've added a lot of stuff to it. I know that for a fact. So you've done a great job. So keep it up.
Well, Bill, thanks. Bill identified, his approach was identify certain points of time as, major high or low points from which to trade. My approach has been more of developing an overall model of how all the pieces tie together. And, his work did identify, the 13th as an important low point, but I don't think the significance of that can really be understood unless you tie it into the context of an overall model, which this long-term work tends to corroborate. So that's it. Thank you very much for your time. I appreciate it.
You bet, Kevin. We'll have you on again soon. Kevin Murphy, folks, from Ameritrade, and we'll have him back on again soon. He's carrying the torch of John Ehrman, who passed away 5 years ago. I worked every day with John for about 4 years trying to develop a program, and he did really good. He was extremely aware of when his work didn't work, that the market was going to go higher. And it was during that period, during 2011 and 2016. And boy, when he said it was going up, he was not kidding. And I remember in July of 2011, we were setting in a 382 retracement in the old stock market. And he flashed it was July, right at an eclipse. And he flashed a big buy signal. And I said, we got to go for this one. And it turned out to be okay. Anyway, we're going to take a little break here. 877-927-6648. Folks, remember, tomorrow we got Financial Cycles Weekly. Timmy the boss man, will be in the house. And on Friday, we're going to have Jeff Huge. And I will be doing a double show tomorrow at 3 p.m. I'll be doing it for Tom O'Brien both Thursday and Friday. So happy days are here again. We'll be right back, boys and girls.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, just for kicks and giggles, let's keep an eye on the E-mini S&P at 3863. We got the Fed coming in here in about 10, 15 minutes. We'll see if that holds it. If 3862 is all it can get out of a rally, we've already rallied about 30 handles. We've rallied 30 handles up to the 3858 level. So 3862 is going to be the 382 of that whole range. And that'll be an interesting number to see what happens. Of course, remember, the Federal Reserve will be giving you the information. Whether they trade around that themselves or not, I'll leave that up to your imagination. Let me think. They got the ultimate of inside information, and they've got a staff of over 200 traders on desks all around the country and all around the world, as a matter of fact. I said, yeah, I think they probably do. And they caught 3 of those dudes last year, if you remember, the guy Kaplan and the other guy in Boston, and I forget what the other one was, but they caught them with the hand in the can in the cookie jar, and nothing was done. They couldn't find anything wrong with what they did. By golly, I think that's a good idea, because whenever I have information, I certainly share it with everybody. The problem is I've never had one bit of inside information that ever worked. And I thought I had some pretty good ones that were interesting, but in fact they weren't. Anyway, let's talk about markets a little bit. We've got the crude oil is still moving up. We're almost at $90 a barrel, folks. You remember we hit that the 61% retracement down there the other day at 81 and change. We're up $9. Gasoline's going higher. Diesel's going higher if they can even find diesel. And then also heating oil is also moving higher. So still things are bullish at that end of the spectrum. Now, to remember, tomorrow we have Tim Bost as our guest. Friday will be Jeff Huge of Alpha Insights. And make sure that you do something for your neighbors and friends, folks, because people do need help. We'll see you on the flip side tomorrow, and may God bless.